Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
for the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia and Russia are in a tight race to become China's top oil supplier in 2020, with both countries boosting crude exports to the economic powerhouse even as the coronavirus pandemic hit global demand for oil this year. Saudi Arabia, which was China's top supplier last year, has exported between 1.6 million and 1.7 million barrels per day (BPD) of crude from January to November 2020, as deep price cuts gave Saudi oil exports a boost this month, according to analytics firms Refinitiv, Vortexa and Kepler.
Smaller Russian oil companies are still planning to pump more crude this year despite a global deal to cut production as they have little leeway in managing the output of startup fields, a group representing the producers said on Friday. Russia is a part of a group known as OPEC+, made up of members of the Organization of the Petroleum Exporting Countries and other major producers, which agreed massive joint cuts to output earlier this year to stabilize battered energy markets.
Moving on to the top news in the energy sector.
Oil supply and demand, hard hit by the COVID-19 pandemic, will not come back into balance until the second half of 2021, WPX Energy CEO Rick Muncrief forecast on Friday at a Federal Reserve Energy conference. Prices could see some uplift in the second half of the coming year as supply and demand balance, Muncrief added.
U.S. energy firms cut the number of oil and natural gas rigs operating for the first time in 10 weeks even as producers return to the well pad with crude prices mostly trading over $40 a barrel since mid-June. The U.S. oil and gas rig count, an indicator of future output, fell by 2 to 310 in the week to November 20, according to Friday data from energy services firm Baker Hughes.
Moving on to metal price moves.
Copper prices surged to their highest in 29 months on Friday as speculators extended a buying spree on continued strong demand in top consumer China and potential supply disruptions. Aluminium, zinc and lead also hit multi-month peaks, fueled by speculative funds that largely use automated trading based on technical signals such as momentum, traders and analysts said. Benchmark copper CMCU3 on the London Metal Exchange (LME) had gained 2.5% to $7,266.50 a ton by 17:05 GMT, its highest since June 2018.
Global primary aluminium output rose in October to 5.592 million tons, up 4.5% year-on-year, data from the International Aluminium Institute (IAI) showed on Friday. Estimated Chinese production was 3.23 million tons in October, it added.
A Zambian court on Friday ordered a halt to liquidation proceedings for Konkola copper mines to allow owners Vedanta and ZCCMIH to proceed to arbitration, the provisional liquidator said in a statement. The India-based group has been locked in a dispute with the Zambian government since May last year, when Lusaka appointed the liquidator. Legal arguments over the case have been heard in both Zambia and South Africa.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.